Suyash, markets once again closed in the red, profit booking seen for third consecutive day today?
Yes, Shweta. So Indian markets continue to remain under pressure, mirroring the global trend in equities after Fitch downgraded US's credit rating. Now, both indices were down as much as 1% today in intraday trade, but they paired some losses after a string of positive earning reports from Indian corporates, especially the heavyweights from the Nifty pack came out, and it seems that it offered some respite to the investors. Now, at close, Sensex was down about 65,240 levels. It was down 0.82%. Meanwhile, Nifty ended 0.74% lower at 19,381 levels. Now, mid cap and the small cap index, which were also trading in the red, paired losses and then some, and ended in the positive territory in today's session. Now, Nifty mid cap 100 was up about 0.25% and the Nifty small cap index was up about 0.12%.
All right, let's also quickly introduce our guest Kranti Butini from Wealth Mill Securities joining us at this point in time. Kranti, thanks very much for taking time out. I want to begin by understanding what are you making of Asian markets, Indian markets, registering profit booking, ending in the red for third consecutive session now.
Hi Shweta, good evening. The Fitch factor is playing the role right now, and the markets across the globe has been tumbling right now. They are drifting down. We can see some kind of profit booking and foreign portfolio investors are exiting equities at this point of time, but it's not a cause of concern at this point of time. It's a normal course of profit booking at this point of time. And after there is a tremendous rally in the market, okay, any negative news or any news that surfaces, okay, that creates some kind of knee-jerk reaction to the market. That's what we have been witnessing in the markets. But it's a good opportunity. Markets, even though the current trend, last 2 days, 3 days, trend is in a negative trend, but the longer term trend is still up, and the market texture is not changed right now. It's in a positive mode only.
Okay, markets in a positive mode. Also, quickly run us through, Suyash, the top gainers and losers before we go to a list of earnings. A lot of company there dampening your Thursday, I believe.
Surely, Shweta. So, when we are talking about the gainers, Adani Enterprises, which came out with its Q1 results today, was among the top gainers. As you can see, it rose about 2.48% in today's session. Now, another Adani stock, which is Adani Ports, also saw some positive buying action, and it was up about 2.14%. Eicher Motors, which is also due to come out with its results, Q1 results today, was up 1.51%, whereas DV's Lab was up 0.88%, tracking a positive momentum in pharma stocks. Now, among the top losers were Titan, which disappointed the streets with its June quarter results. It was down about 2.39%. ONGC, which fell about 2.36%. Bajaj Finserv, which was down 2.35%. ICICI Bank, which was down about 2.07%. Now, among sectoral indices, most of them were under pressure in today's session. Although Nifty Pharma bucked the trend, as you can see, it was up about 1.04% in today's session, whereas Nifty Bank and other financial stocks saw some profit booking today. Nifty Bank was down about 1.07%, and Nifty Private Bank was down about 1%, whereas Nifty PSU Bank also fell about 0.5%. Now, among other losers were Nifty Auto and Nifty IT, which were down about 0.32% and 0.24%. FMCG stocks also remained under pressure today and were down about 5.8%.
All right, let's quickly move on to earnings now. One of the top earnings that we're tracking is that of Adani Enterprises, the flagship Adani company. Run us through the numbers.
So, Shweta, Adani, right before we went live on the show, Adani Enterprises came out with its numbers. As you can see now, Adani did post a good beat, and we saw a significant spike in the stock prices also. The stock ended as a top gainer, up about 2%. So 44% year-on-year jump in net profit at about 674 crore versus 469 crore in the year ago period. Revenue, however, dropped about 38%, which Adani has attributed to a rise in coal prices. So revenue figures stood at about 25,438 crore versus about 40,844 crore. Now the margin figure, Shweta, 554 basis points jump we saw from 4% 4.36% in the in Q1 FY23 to 9.9% in this particular quarter.
All right, Kranti, what explains these massive earnings? And also for the Adani group of companies, a company that was facing immense allegations, pressure from public, sometimes even in the public discourse, and from investors, seem to be doing really well. All 10 listed companies, of which results have come so far, have been positive.
Yeah, Shweta. Yeah, the results have been better than expected. Okay, and coming to Adani Enterprises today's results, even though despite the fall of around 38% with respect to the revenues are concerned, 25,810 crores, the fall is significant in terms of revenues. But well, coming to the profitability, they have posted 44%, 45% EBITDA margins and profitability. So right now, the companies have been focusing on more on profitability right now. Okay, the focus is to make the companies productive and profitability. That's where the focus is right now for the management. Coming to Adani's with respect to the long saga, the news, all the stocks have been turbulent from quite a long time. But what we have witnessed is the investor confidence has coming back right now. The company has taken measures to restore the investor confidence. One hand, they are reducing the debt and also trying to increase the corporate governance, trying to increase the investor confidence. That's the exercise currently is going on for Adani as a group at this point of time.
All right, Kranti. Another interesting earning that we are tracking this afternoon is that of Sun Pharma. Suyash, how are the numbers looking?
So, Shweta, Sun Pharma came out with its Q1 results just about an hour ago. Now, the profit on a year-on-year basis declined about 1.9%. Now, this was on account of a one-time loss of 323 crore. Now, if we remove that one-time effect loss of an exceptional item, the profit figure was actually in line with the street estimates. Now, the revenue figure and the EBITDA margins were great and actually beat street's expectations. The revenue jumped about 11% from 10,761 crore in the year-ago period to about 11,941 crores. The margin also saw a 230 basis point jump. Now, US sales of the company has surged to about 471 million, which was ahead of estimates of about 440 to 450 million dollars in the previous quarter. Now, the company has invested about 680 crores in research and development in the June quarter, as against 460.8 crores in the previous quarter. Now, the shares of Sun Pharma were trading higher, as was the case with most pharma stocks. Now, they touched a 52-week high of 1,169 rupees in early morning trade, although the stock reacted negatively to the earnings report, and it closed up about 0.51% in today's session.
It did close up about 0.51%, margin up about 230 basis points. How are you reading these numbers, Kranti?
Yeah, seems to be what the worst is behind for pharmaceutical companies, and it's clearly demonstrated with Sun Pharma. And next coming 2 quarters results are crucial for Sun Pharma. Investors right now who are a little bit adverse and who have not taken the participation in pharma stocks, who have been waiting on sidelines. I think the time has come to consider pharma stocks in their portfolio, Shweta, after looking at the pharma stocks numbers.
All right, and pharma stocks there bucking the trend today as well on the Lal Street. Let's also quickly go to Dabur that came out with its results this afternoon.
So, Shweta, Dabur's results were actually in line with the street expectations, but the stock reacted negatively and extended its losses throughout the session, and it was down about 1.88% in today's session. Now, profit jumped about 3.5% from 441 crore in Q1 FY23 to 456.6 crore in Q1 FY24. Now, revenue jumped about in double digits, about 11% to 3,130 crore. Now, the company said the revenue growth was driven by a strong double-digit growth in the home and personal care segment and the healthcare business. Now, the Q1 revenue growth of these particular segments stood at about 13% compared to the consolidated figures of about 11%. Now the company has reported an underlying volume growth of about 3% in India's FMCG business, whereas the consolidated EBITDA margin stood flat at about 19.3%.
All right, Kranti, margins is net, no increase, no decrease from the last quarter. FMCG business perhaps not doing too well as well. It was on the numbers are on the back of home decor, you say, Suyash?
Yes. The personal healthcare sector.
The personal healthcare sector. Kranti.
Yeah. Shweta, the numbers seems to be subdued at this point of time, and Dabur has been posting the same sort of numbers from past last 2-3 quarters. Okay, and the underperformance may continue for Dabur. They have been entering into the new geographies, but the numbers have been subdued with respect to Dabur is concerned. So the investors at this point of time, they can hold on to the stock, but not no fresh positions at this point of time with respect to Dabur is concerned, Shweta.
And before I let you go, Suyash, Varun Beverages and their quarterly earnings, how did that pan out?
So Varun Beverages was another FMCG company, but this time from the mid-cap space, which came out with its set of earnings results today, and they were better than expected, Shweta. Now net profit for the year jumped 26.2% on a year-on-year basis from 787.4 crore to 993.8 crore. Now revenue jumped about 13.6% to just under 5,700 crore from 5,017 crore in the previous quarter. Now revenue growth was, according to the company, was driven by better realizations. Although investors should note that the working capital days of the company, working capital days, which essentially measures the efficiency of a company to convert its net working capital into revenue. So it basically, how much time it takes to sell the inventory and to collect the receivables. Now that came, the days of working capital days increased from about 17 in the previous quarters to about 21 days. Now this was as per the company on account of untimely rains. Although the stock did fairly well, it ended about 1.79% in today's session. On a year-to-date basis, it's up 25%, and in the last 12 months, Shweta, it's up 75%. So Varun Beverages is making good money for its
making
investors.
Very good money, and untimely rainfall could have been a dampener, Kranti, with a large part of North India, and this is a story we covered here on Newsline, large part of North India not drinking as many beverages as they were likely to, given the summers were better than expected.
But Shweta, to be very honest with you, the stock has been a super performer. If you see the last 1.5 year, the stock has up more than 100%. The stock has been posting better earnings every quarter, and any dip in the stock, it's investor can need to accumulate the stock in a staggered manner, a proxy to the PepsiCo, and India is one of the growing franchises for PepsiCo in India, and this is the stock with a market capitalization right now touched 1 lakh crores. So any dip in Varun Beverages, investor with a long-term horizon, definitely it's a very good buying opportunity. But it's a fully priced in stock. That is the reason I advocate the investors. Any dip in the stock that gives in this market knee-jerk reactions, it's a good entry level for the investors who missed the rally in the previous 1 year. But still, the stock is going to do well. The new product introductions they are doing, and they are creating the buzz for Varun Beverages is concerned, and also the core business is doing extremely good.
Core business is doing well for Varun Beverages, reporting good numbers there, increase of 150 basis point in margins as compared to last quarter. Kranti Bhatini, thanks very much, sir, for taking time out, for joining us in the newsroom. We're going to move on for now. A year after the government withdrew personal data protection bill, it's all set to table the digital personal data protection bill. The bill governs digital personal data by providing a legislative framework. It highlights the rights and duties of citizens and the obligation of of businesses dealing in data. The bill is also worrying on various parameters, including that the bill provides exemptions for government agencies, which raise concerns about possible misuse of personal data by public authorities. While the bill calls for setting up a data protection board, critics argue that Digital Personal Data Bill or DPDP could also allow government to direct any entity, government entity, to furnish information as it may call for, allowing central government more control over public data, data that is our data, people's data. We're going to discuss the implication of data protection bill. It's going to be tabled in Lok Sabha very, very soon. Joining us at this point in time is Kanish Gaur, who's the CEO of India Future Foundation. With me is joining us Kartik Malhotra, Amit Ranjan. Gentlemen, both of you, please do come walk in and explain to us, Kartik, what does this bill mean?
So I think, Shweta, the bill has been tabled in Parliament right now, and we should be getting input of the Minister Ashwini Vaishnav and some input from Parliament right now as the bill gets tabled. I believe it has been tabled right now as you're speaking, and in some time we should be able to get visuals. Until then, let me just try and explain to you and our viewers what this data protection bill or the Digital Personal Data Protection Bill 2023 really means. Now let's look at the critical players here. There are three players in this whole equation. One, of course, are the data principals. Who are the data principals? Data principals are you, Amit, me, the citizens of India, also called the digital Nagriks. These are people who have a digital footprint, who offer or consume data and leave some sort of a digital footprint by way of personal information on the internet. Where is this information captured? That's the second player, data fiduciaries. Who are these data fiduciaries? Data fiduciaries are companies, businesses, startups, etc., who use this data. They use this data because this is the data that we have provided them. We have put our phone number, our email ID, our Aadhaar number, our PAN card details, etc. Anytime you book an airline, anytime you do an online shopping, anytime you check into a hotel, there is data that is getting exchanged. This data is held by data fiduciaries. When you offer your Aadhaar number or your PAN card or your phone number or your email ID, anytime you've gone out shopping, that data gets captured somewhere. That data is captured with the data fiduciary. The third player here is the Data Protection Board. Now the bill adds Data Protection Board as a third critical player in this overall scheme of things, and this is a government appointed body which is going to ensure that the data that we offer to our fiduciaries and the fiduciaries who own this data, that data stays protected. Okay. Now let's look at the fine print very, very quickly because the fine print is actually important. Now, what this new data protection bill suggests is that data collected by any of these fiduciaries can't be shared with another company or with somebody who wants to acquire this data without a formal consent of the data principal. That means a frictionless consent form very clearly articulating what our data is going to be used for, where it gets transferred, to whom it gets transferred, in which context. That becomes a very critical measure where these data fiduciaries cannot share data with any other organization without a formal consent. There's one more point to it. The other point is that the frictionless data also has to work in the reverse. So if we can move on to the next graphic, it shows that, we are...
Before we move to the next graphic, because those are important fine prints, we have a quick bite of Ashwini Vaishnav while he tabled that bill in Parliament. Let's quickly cut to that first.
Honorable Chairman Sir, I rise to move for leave to introduce a bill to provide for the processing of digital personal data in a manner that recognizes both the right of individuals to protect their personal data and the need to process such personal data for lawful purposes and for matters connected therewith or incidental thereto.
IT Minister Ashwini Vaishnav tabling that very, very important bill. Before we go to concerns, they've been building concerns. Let's also, quickly understand the fine prints. You were, of course, Kartik, taking us through
that's what Ashwini Vaishnav also just said, the Honorable Minister for IT. And now the point is that, once we are talking about frictionless sharing of data and the consent form to be very, very frictionless and easy and clearly articulated, even the reverse of that has to be as easy, which means I should be able to, as a data principal, withdraw my consent. As soon as I find out that I don't want to continue sharing my data, I should be as easily able to withdraw it as easily as I comply with sharing of it. And any breach of data by a fiduciary has to be reported to the data principals, which is us, and to the protection board.
Okay.
We'll come to the concerns subsequently.
All right, let me also quickly get in Amit into this conversation. Amit, you've been tracking this story. We don't have our guest through just as yet. I want to understand from you what's happening here. Government says the intent is to protect citizens, us, the digital Nagriks, because we've been raising concerns around data being breached, data being shared without consent, and this bill will provide a framework where you and I will be able to consent to where our data is used. So where's the problem?
There is some fine print where the problem is. One is what has surprised experts is the takedown clause, that the government can now does not need to request a platform owner to take down certain content. It can just take it down or block it altogether as advised after the advice of the Data Protection Board. So Data Protection Board is going to advise the government on content and on grievances of individual data owners who are the data principals in this matter. The other fine print regarding the fiduciaries and the principals is that if a principal has put data with a fiduciary and has not specified or restricted them to process it, the fiduciary is free to process that data. Processing does not mean giving it out to another third party, but processing it for its own, the way it uses that content. So that is a little bit of a fine print. The upside is that there is a telecom dispute settlement and appellate tribunal which has the power of the civil court, where grievances against the advisors of the data protection bill can be challenged.
All right.
So anybody who does not like the decisions of the data protection bill, there is a body which has the powers of a civil court where these grievances can be taken on and challenged.
All right, but this body again is a government body, essentially.
So two bodies here, from what I understand from what Amit is saying. One, of course, is the Data Protection Board, and the other is the tribunal. And the tribunal, I think, is for grievances. So the Data Protection Board's job is to ensure, it's like a regulator, or it's like an association, like let's say the DGCA or the TRAI. These are government appointed bodies whose sole purpose of existence is to ensure that compliances are met with. Now, in case of a breach of compliance, the authority lies with the Data Protection Board to either impose a penalty, which I believe is now about 250 crore rupees, except that there is no criminal proceeding likely to happen against a fiduciary who happens to breach the data compliance, right? But coming back to the point, so now in case of a conflict, in case of any sort of a dispute between the fiduciary and the data principal, or the data principal, data fiduciary and the Data Protection Board, in case of any sort of discord between them, the tribunal comes in, which has the powers of a court,
of a civil
court, to be able to decide on matters in favor of either party.
All right. Kanishk is joining us at this point in time. Kanishk, good afternoon. We're discussing, of course, the fine prints of the data protection bill. It's now tabled in Lok Sabha. It's going to go through as a regular bill, not as a money bill, which essentially means it will be discussed in Lok Sabha, will then subsequently go to Rajya Sabha. Concerns were raised by opposition parties, concerns were raised and concerns continue to be raised by people who track, monitor data privacy laws. What is the concern here with this bill?
The concern is that takedowns will gonna take place in the name of national interest, which might violate freedom of expression for certain individuals or people who are involved in activities which are from civil society. Second, in terms of platforms being pushed to take down certain content, which the government believes can cause larger harm, can be tracked, put as information warfare, misuse. So it gives government additional authority to take down. They will no longer be going after the platform saying take this content down. They would have authorities equivalent to judiciaries to do this much more stronger. So that's one of the key concerns. Right. The other thing is there,
All
the
right.
right to be
Before we go to your next concern, I think what my colleague Karthik here was alluding to is that even if the board does take a decision, there is going to be an authority where you can go and challenge that decision. Essentially, a semi-court-like authority, a tribunal, where you can challenge that decision. So the tribunal may be able to reverse the order of the board. Does that not give some sort of leeway to people where they can challenge a decision made by the government?
So it creates a quasi-judiciary authority. Right now, this kind of work is being done by the courts. So if you look at the case which is happening in case of Twitter and the Ministry of Electronic Information Technology, Twitter went to the Karnataka High Court against specific blocking orders. Now, this mechanism creates a quasi-judicial authority. So there are issues in terms of maker and checker. If this entire body is under the Ministry of Electronics Information Technology, then there would be people who would be crying out, okay, that we will no longer be able to put this in front of the court, or it will tomorrow create conflict on this particular matter. So the whole aspects on keeping this authority independent are questions of grave concern right now. That would this be completely under Ministry of Electronics Information Technology, or would this be an independent body? Who are going to be the people who are going to be part of this? How independent they will be? What would be the job description according to which they would be chosen? Right? Will there be people who have served as honorable judges of different high courts or Supreme Court? Those are larger concerns. What would be the formation? What would be their knowledge? Right? How will they exercise powers? What will be the provisions? And the penalty. The biggest part, so this bill talks about penalty up to 250 crores, right? From 10,000 rupees to 250 crores. So this increases the liability, the cost for platforms and businesses to do work in India, right? And certain aspects around keeping
But
data in India.
Cost only in case there is a breach and a breach established.
Yes, breach established. So the thing is, one, if a breach is established, they will put out penalties. But also in terms of storing that data, because there are aspects in terms of what data needs to be kept in India, what data needs to be shared. For getting this data to be shared, you will have to create those local copies or giving access. Now, if you've got cloud services set up, localization, that is going to be additional cost, particularly for the tech platforms. And we have so many tech platforms which are operating in India. We have only focused on maybe 3 or 4 the big tech. So the larger tech platforms will come into the picture. The intermediaries, that's going to be there. Then consent mechanisms, that's significant cost. How do you build out consent mechanisms from every user for letting them know how your data is getting accessed, shared? What kind of tools and technology are you using for monitoring them? So if you're allowing people to access a particular website and you want cookies to be accepted, right now nobody really checks, everybody just accepts. So you have to define what kind of monitoring you're doing, tools, mechanisms you're doing to monitor their data, monitor their devices. All of this will require significant amount of investments from companies to make. Even the consent mechanisms in terms of getting people to sign up on mobile apps or web apps or even a POS. That storing it, sharing it, even the third-party suppliers. So there are a lot of companies which have more than 50,000 third-party suppliers which are operating, large telecom service providers. All of that data goes outside. So keeping them under check, building a data governance mechanisms, safeguarding your business from third parties is going to be very, very important. Because you might be running a large retail business, but your data would be completely managed by a large IT service provider. And because of that large IT service provider, you could be under a liability or a breach which could go up to a large number. I won't say 250 crores, but even 50 crores. Then what is the skin in the game for this large IT tech company? So those are going to be some of the key things. So the contracts in India will have to be redrawn today to look at the service providers are also taken into account. The aspects with respect to children. How do you draw out children to give consent? You'll have to have parents involved. You'll have to have consents being taken. who is authorized. All that plays a very, very important role.
All right.
Aspects such as encrypting, masking data. Masking data, so when you're sharing this data with a third-party service provider, what kind of data access you are given. So that's large amount of work. So the implementation would incur significant cost, not just for the tech companies, but also for the companies which are providing the hardware.
All right, those concerns are fair enough. There are concerns with respect to consent. How do you, Karthik, acquire consent? What about kids who are less than 18 years of age? That's number one. Number two, data localization, the cost of data localization, that is another concern. Number three is compliance. How about data that is shared outside of this country? Every time you can't go to the government of India to take consent. All of those, of course, are going to be challenges that the bill will either have to mitigate or answer. We don't have the fine prints of the bill just as yet, but what Kanishk is alluding to is that costs for small companies becomes a lot more higher because the contracts will have to be now redrawn.
So Shweta, I think, see, the concept of utopia doesn't exist. There is no perfect world. Life is full of challenges, right? But I'm not talking, philosophically, I'm talking pure business. Every business and every compliance and every rule change comes with its own set of challenges. But compare this with no policy in place at all. Any retail outlet you walk into, you share your phone number, you share your email address, you swipe your credit card, there is a digital footprint you are leaving. And right now, with in the absence of a consent, God alone knows where all that data is going to get transmitted. So as a user, you have no control over it. And to earn extra income, you don't know where all this data is being shared by the retailer, and the retailer is just one of the multiple examples where we go and leave a digital footprint. So I'm saying, in the absence of any safeguard, at least there is one step forward. Now, of course, there are challenges. Those challenges will have to get mitigated. There is going to be a cost implication. There are going to be contractual obligations, but companies will have to comply with that.
Okay. Okay. Kanishk, I want to quickly come to you. I mean, what would have been a better law? My colleague Karthik here suggesting that every time there is a law change, and which I think is true for all changes in law ever made, there is of course increased burden of compliance. There are contracts that you have to redraw. How would you then have envisioned a bill like this where our footprints of common people, digital nagriks as the government would like to call it, is also protected, is also not abused, but at the same time it makes it easy for companies to also comply with changes?
So my view is that we had split the Personal Data Protection Bill and the Digital India Act into two parts. If we were looking at creating a larger data protection regime within the country, we could have just have one single law getting passed and not split it into two, because once this is done, there will be another version of the Digital India Act which is going to come in, right? So there will be significant amount of changes that the organizations will have to make again. So the cost of compliance is going to go further. So when you look at EU, they implemented GDPR at one go, whether it was for non.
All right, it looks like
bills multiple times.
Right.
Yeah.
Right, sorry, we can hear you again. Yes.
That increases the cost for everybody. Yeah. So that increases the cost so much. Even for government to do that again. Right now, we will move into the next session. The Digital India Act is not going to come in the monsoon session. That will move to December, the next session. So, right, another act coming in 6 months, how the industry is going to be ready for it. Significant changes around those, more costs. So a single law which comes out overall would have been a better choice. And that is happening. We've seen Pakistan, a country like Pakistan, come up with a data protection bill before India, and we have done it in one go. For a country like India, where there are large data sets lying, doing it at one go would have been made much more better choice to look at, rather than splitting it into two parts, saying personal data looked at separately, the other part looked at done in another huddle. So that's primarily the aspect, and it will save time, consultations,
right,
consent mechanisms. Yeah, I think that would have been a better way to make it.
Shweta, I believe from a product perspective, these are tech companies we are talking about mostly, right? Including one more page in the terms and conditions or one more pop-up that gives you allow your data to be shared or you deny your data to be shared would not be very expensive or very complex programming changes, I believe. At the other end of the spectrum, the offline services where your data goes, I think keeping a physical form or sending you an email that you reply with, these are easy, quick fixes that can be done. I'm not worried as much about the cost to organizations, to the data fiduciaries, as I'm worried about possible misuse of the powers of the government, right?
Yes.
Of the data protection board, not even the data protection board, but things that can come under the garb of national security. But then there are examples in the world. Look at Europe's GDPR regulations, among the most stringent when it comes to data protection. It is next to impossible for a fiduciary in Europe to share data without consent. There are these best practices available abroad. Look at what is happening with TikTok in the US. I mean, India banned it for a different reason, but there are Republican states in the US which want to ban TikTok because there is this fear that TikTok is transmitting data of US citizens back to China, which could be misused. Now, there could be a jury out there every time to discuss and debate whether this constitutes national interest or not, whether there is a vested interest or not. But I think as citizens, we should welcome at least some direction towards protection of our data. Of course, there are chances of breach. Of course, there are chances of misuse. Yes, there are chances of over-policing by the government and misuse by the government. Government, for example, using that data to run its own analytics to understand what content you watch on social media or which, I mean, eventually who you may vote for, who you vote for physically, the government may still not be able to understand using this bill.
But your preferences.
But your preferences, your taste, your preferences, your shopping habits, what you spend on, where you travel, which cities you've gone
all
to.
All
of that, of course, can get accessed by somebody.
Literally
but at
all
least by the government,
data.
not by just any other random company who happens to have your data.
I don't know which is bad,
because
by the
one
way.
fiduciary had access to your original data.
I don't know which is bad. An entity having your data for political gains?
At least cut the risk by 50%. That was in any case available.
Right.
At least cut it by 50%, which is what I hope this bill will promise to do.
Yes.
All said and done, this has been a long time coming. It was withdrawn in 2021. There were 81 changes that were suggested and 12 additions by the Joint Parliamentary Committee. It's 2023 now. At least it has come. There will be fine print changes.
We don't know whether it's
passed as far as we know. It hasn't been passed.
Right, so it's been tabled
so
again.
It's been a long time coming. It's finally there.
All right, so it's been tabled again. We don't know if it's going to be passed again or not. We don't know whether the opposition is going to take it easy. We've heard a lot of opposition figures, including Manish Tiwari, talking about a need for discussion, debate on this. So Congress,
in fact, also recommending that it should go back to the JPC before it comes back into Parliament, and why it has been classified as a finance bill and then it becomes a money bill and escapes Rajya Sabha. But I think from what I understand, maybe it's tabling
now
in Parliament.
Now it's being tabled as a regular bill.
As a regular bill should put a rest to
all the concerns. So it's not being tabled as the Aadhaar bill was tabled.
That's right.
It's going to be discussed and all those discussions will be out in public forum. Kanishk, thanks very much for joining with your inputs. We will of course keep coming back to you. This is an important story. We want to know risks associated with data privacy, data protection. For all of that and more, we're going to come back to you. Thank you very much. All right, shifting focus now. A policy to govern e-commerce in India is in its final stage. The government has shared broad contours which sets to draw firm discussion or distinction rather between marketplace, warehouse-based model and web store. The government has held final consultations with industry players like Flipkart, Amazon, Zomato, as well as industry bodies like CAIT and others. The policy will address concerns around private labels, preferential treatment of sellers, deep discounting, and the fallback liability on e-commerce platform, among others. These are important discussions and we will have a guest joining us very, very shortly. But I want to first quickly come to you. A policy in making for e-commerce, this is the final stage. We're given to understand the policy discussions are happening. Various confederations, various stakeholders are now discussing as to what the policy is going to look like. But essentially, your brick and mortar business, which has been in loggerheads with e-commerce platforms for a very, very long time, mainly due to their deep discounting, brick and mortar business not gaining the same sort of traction as it was prior to Amazon, Flipkart came into being. All of those concerns will be put to rest after this.
Should be, and this bill, we're still in the ambit of speculation of what it's going to look like, but it's likely to be focused towards increasing transparency and focus more towards the consumer. So things like product catalogs, search results, they will need to be more transparent, more fair to the consumers. There is likely to be setting up of an e-commerce exports hub as well, which is going to create a favorable platform for businesses to access foreign cross-border e-commerce sites and activities. So that is going towards creating a level playing field for Indian players in the global markets. So those are the things that are expected. The policy is also likely to prohibit marketplaces from having any ownerships in the sellers. So things coming on Flipkart, being displayed on Flipkart cannot be owned by Flipkart, which was the case, as Karthik told me some time back, that there was a company, Marq, which was on Flipkart, which is owned by Flipkart at least partly. So those things will not happen now. FDI right now is allowed in the platform provision space, not in the inventory-based model space in the e-commerce category. Will that change? We'll have to wait and watch.
All right, let's quickly also get in Praveen Khandelwal of the Confederation of All India Traders, who has been a crucial key player in that discussion with the government. Praveen, I want to understand what does this policy entail? What have you heard from the government so far? You've been a part of these discussions. What would an e-commerce policy look like?
E-commerce policy is important in the context that whenever there is any activity or trade, it needs to have a robust policy so that within the parameters of the policy, the stakeholders should work. So this e-commerce came in the year, say around actively, it started in 2010 in India. Unfortunately, till date, there was no policy and no rules. Taking advantage of the absence of the rules and the policy, the foreign funded e-commerce companies have held the retail trade as hostage. And now it is the time when India is moving to become global leader. So there is an emergent need for bringing e-commerce policy and e-commerce rules so that democracy may prevail in e-commerce business. That is why the e-commerce policy and the rules both are very important.
E-commerce rules are important. That is without a question. It's been 10 years since Amazon came into India. Since more than that. 12 years perhaps?
Yeah.
12 years since Amazon.
I think 2008 is when Flipkart came. 2010 or 11 would have been the year that Amazon came to India. Amazon,
so
of course, has been in existence for 22, 23 years.
Right. So in India, they came in about 15 years ago. And since then, you've got Confederation of All India Traders. That's just one body.
Offline retailers,
brick and mortar businesses, all of them going after e-commerce players. Why? Because it killed business for them. Perhaps with this policy now...
unfortunately, data never confirmed that.
Yeah,
data
I agree
always showed growth on account of offline and a much larger growth in terms of online.
Right.
That offline growth might have grown faster in the absence of online.
But the tacit understanding is a lot of us buyers go out there in the retail store, we look for what we want, then go back to the e-commerce platform and end up buying it.
So what have been the key concerns? Number one, deep discounting, and number two, access to consumer data, which helps e-commerce firms understand exactly what the customer wants, over time analyze that data and set up their own private labels. And that's the example I was giving Amit also, that both Flipkart and Amazon Basics, for example, Flipkart's Mark and a couple of other such private labels mushroomed and came into being because these large e-commerce players understood exactly what customers across cohorts want and got their own private labels to serve them exactly that at a cheaper price. So deep discounting existing products and creating Me Too, likewise similar man-to-man products of their own brands, which they were able to sell even cheaper.
Okay.
So obviously, you know, retailers and offline trade and online have always been in conflict with each other. Some sort of a policy framework in the form of this e-commerce policy should at least level the playing field for both and
Right.
have something for everybody.
Right. And before I let you go, Praveen, I also want to quickly understand, what does this policy mean for consumers? What is in it for consumers?
Consumers will be benefited because currently in the e-commerce landscape, the consumers are not informed. There are hidden charges these companies are taking. Consumer has no liberty to select the payment provider, the logistic firm, and all that. So therefore, it will be very beneficial for the consumer. Once this policy and rules takes place, then there will be an informed consumer. Whatever the charges, consumer will be knowing, and from where the material is coming. Today, consumer doesn't know that whom he has placed the order and from whom he is getting the material. He knows the name only of the company that this company is selling, whereas this company, being a marketplace, cannot sell any material. So that is why it is very important. So consumer will stand benefited.
All right, so consumer will essentially gain, they will know who's giving them what, and also there's going to be some fallback liability. If you order iPhone and get a rice bag, consumers...
Or a bar of soap, even worse.
Then e-commerce companies will now be liable. Praveen, thanks very much for joining with those inputs. It is an important story. The draft is in its final stage. We don't know whether that's going to happen, whether it's going to go to the parliament first and then perhaps be tabled.
Definitely not in the monsoon.
Not in monsoon session, perhaps in
not.
winter session. We don't know, because the policy is now final. It's in its final stages. So we can only hope that it will be tabled perhaps in the winter session. Gentlemen, both of you, thanks very much for taking time out. But before we wrap up, in a surprising development, the government has imposed import restrictions on laptops, tablets and certain type of computers with immediate effect, a move that will curtail inbound shipments of these goods from countries like China and boost domestic manufacturing. The restrictions have also been imposed on microcomputers, large or mainframe computers and certain data processing machines. Importers of these items would now have to seek permission or license from the government for their inbound shipment. Now, certain exemptions, of course, have been made, given that these curbs are going to be put into effect immediately. So that's a story that's breaking in at this hour. We'll bring you more as and when we can. Thanks very much for watching.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals